I'm going to give you the exact strategy that helped me make $1,700 a day day trading the NASDAQ. This is a very basic strategy and really the only strategy any day trader really needs to make money in this market. It is the foundation of trading, in my opinion, and that is supply and demand. And I'm going to show you exactly what I'm talking about, the levels that I looked at and the trades that I took to help me make that $1,700. Let's go ahead and dive into the charts. So looking at this, we day trade the NASDAQ today. And you could tell we've been kind of just consolidating in this range ever since we had CPI. We ripped up on CPI and we just been kind of sideways. Now, zooming into today, we know that we have a lot of supply up here. And I'm going to show you what I mean. I'm going to get my rectangles here. Okay. And then I'm going to draw a box basically from this area where we saw a massive sell-off to this little area down here, right? And I'm going to draw it over. Look at the theme, right? Look at this theme here. We sold off from this area. We came back up and retested it and sold back down. We came up and kind of tested the bottom area of this supply zone, sold back down. We came up and tested it, sold back down. And this is today where I took these trades. And I'm going to label this box actually. Oops, if I can get there we go. Let's just label this red. There we go. So now we have our supply box. You can see the common theme where we've come up and tested it and sold off every single time. All right, so with that in mind, if we scroll over to where we have all of these wicks, right? We see these wicks coming up in this supply zone and it just rejects every single time, right? We come up, get rejected. We come up, get rejected. We actually made the highs here and got rejected and sold right back off and sold all the way down below VWAP to then come back up in this exact zone and continue rejecting it. When I saw this rejection, all of this rejection up here, this is where I got in, right? I got in at around 95, or sorry, it was 93. I got in at 93, and then I added at 82. Okay, so my average price, I think, was like 85 or something like that. So knowing that we're rejecting this supply zone, what's the common theme? We always sell off from this. And so what happened? We sold off. Now, I let these run. I got out of one contract somewhere down here in like 68. And tried to let the last one run. However, as I was trailing my last contract in profit, it did end up coming up and like stopping me out on that contract. Both were in profit, but it's a very easy trade. This trade is very, very easy to look at and was very easy to execute because we know we're in a supply zone. We know that we're constantly getting rejected, and we know that the common theme is that every time we test this, we sell off. And that's exactly what happened. This was a very easy trade. Once you identify supply zones, you get the theme of where we start to sell off. And the only thing that you need to look for is volume coming in for sellers to bring us back down. Volume moves price. All right? Volume moves price. So once you wait for volume and seller volume to come through, then bang, look at that. Easy trade to take. So that was the first profitable trade that I took. Now let's go down and look at where I took the opposite trade and I actually went long. So now let's scroll out and let's draw a demand zone here. Let's get our rectangle. If we go back to CPI, you can see we had a little bit of consolidation here. So I'm just going to draw, and we have a little bit of support, right? We have a support line here where we always bought up off of. So I'm going to draw this demand zone basically from the bottom of this consolidation up to our support line. All right. There. Now we are consolidating sideways, right? But let's look at the theme of where all the buying takes place. Okay, we know we have demand here. Every time we come down in this zone, we bought off of it. Right here, we bought off. Right here, we bought off. Right here, same thing. Right here, same thing. Right here, same thing. So we know that's a common theme, right? Now, what happened here? Today, we actually broke this support line inside of this demand zone. Keep in mind that support is different than demand, all right? So when we broke this sell side liquidity here, this support line, we got buyers coming back in to buy us back above this. And this was aggressive buying. And when I was looking at Bookmap, there was a ton of volume coming through on the buy side. And so seeing that, I was like, wow, okay, buyers are coming in aggressively. We got volume coming in on the buy side. Let's get in on this. And so I took it long. I took an aggressive entry because it seemed like a very good trade to take. I got in basically at 822 here, which was the bottom of these support ranges. But I got in down here, and I also added just above the support ranges as well to get in for 2 contracts. let them run, exited one, had a trailing stop. My trailing stop did end up getting tapped out before this second half of the move, which I was really upset about. I swear today I was getting stop hunted. It just, every single time I set a stop loss on my last final contract, I always got tapped out on the last tick before the move finally actually happened, like the last half of the move. I always got stopped out on the last tick. It was quite frustrating. But anyways, we did catch a little bit of the move here, which our job as day traders is just to catch a piece of the pie. No, we don't have to catch all of it, right? So, but looking at this, right, breaking this down again, we know we're in this big demand zone where we get buyers every single time. Once we saw buyers move aggressively down here to bring us back above the support zone, it was go time. Like that was, again, another very easy trade to take because we have volume on the buy side. We're in a demand zone. All things pointed to this thing going up. So when you understand supply and demand and you understand volume moves price, you just wait for confirmation, right? You get in these supply zones or these demand zones and you wait for confirmation of buyers or sellers to show you that we want to reject or find support and move us in either direction, right? If we're in a supply zone, you want to see sellers step up and bring us back down. So bring us back down, get the volume coming down to the downside. And then vice versa, when we get into demand, you want to see buyers step up and buy side volume start to come in and the buyers get aggressive, showing us that we want to go ahead and reverse this back up. That is the key principle to supply and demand. You locate the areas, you wait for volume. When you see that, that's your confirmation to go ahead and take the trade either long or short, depending on where you're at. And that is the ultimate, literally the best, I think, in my opinion, the best strategy you could have as a day trader. You understand that, and you take good high probability trades, which is if you take a supply and demand trade, chances are it's high probability, and chances are you have a high R&R. And when you have a high R&R, risk to reward, it's hard to not be profitable. So if you just keep that in mind, you're going to take fewer trades, you're going to take the best trades, and you're going to be a good trader if you just focus on this one simple concept. And that is how I made $1,700 a day day trading the NASDAQ. So if you guys like this kind of content, be sure to smash the like button down below, subscribe to the YouTube channel, get more daily content, and I will see you in the next video. Cheers.